Okay, you're with us here on a fresh new edition of Mid-Cap Radar, and the pullback that we saw starting about an hour and a half ago continues. I mean, it's not pulling back fast and furious, but it is a slow, steady grind higher. And I mean, it's not much, 35 points, but at one point it looked a bit dicey. At least we are past those levels. 10,500 plus is where we are on the Nifty. At this point in time. The Bank Nifty should come up on your screen as well. The next set of cues, of course, in terms of global markets will come from Europe, which should be opening up as we speak. 35 points in the Bank Nifty. That is also pretty much at the day's highest point. These are the very initial first rates coming in on European markets. FTSE, CAC, both are slightly higher. Remember, Asia earlier in the day also recovered from the day lows. Asian emerging market currencies also recovered against the US dollar. So things have improved over the last many hours as compared to what it looked like when we got to work this morning with that big cut in the Dow and the S&P 500. So, good afternoon.
Hi, Prashant. Good afternoon. And, given the way the global markets have panned out, we have done well, actually, even compared to the global setup. And, of course, the big positive remains that crude is back below that $70 a barrel mark. But first up, let's take you through our top stories. The market is at the day's high. The Nifty and Sensex trade with modest gains. Oil marketing companies outperform. Sun Pharma and Tata Motors lag. The mid-cap index is weak, but off the day's low.
The Reserve Bank of India, the Reserve Bank governor visits the Prime Minister. Sources say a middle ground may have been found after all. The rupee appreciates. It's the best performing currency today. The news on the PM governor meeting is an exclusive.
Crude oil prices tumble below $70 a barrel after US President Donald Trump puts pressure on OPEC not to cut supply to prop up the market. Shares of oil marketing companies surge in trade.
Pharma is the worst performing index today. Sun Pharma takes a knock ahead of earnings. Aurobindo Pharma slips despite reporting good numbers. Wockhardt, though, takes a knock after losing an appeal to launch the generic version of an important drug.
The Bank of India stock remains under pressure following another quarter of net loss. Management assures investors that they will post a profit in Q3. Jet Airways rises despite weak earnings on reports of possible interest from the Tatas.
All right, so there is news at the bottom of the screen. This is in the case of IL&FS. Bank of Baroda and other lenders, ICICI, Max, Bupa, etc., they moved NCLAT versus the blanket stay on initiating recovery proceedings. So that is interesting, and we'll get you more on this story in a bit from now. Okay, Ashwini is with us on the top of the show to run us through what he's making of things. Ashwini, so 35 points, do you still believe that this will get sold into? Because you were, when we spoke at 11:30, you were saying the market not reacting to good news. Still maintain that view?
Well, there's not much of a reaction and it's fairly labored. So that means that there is no big institutional buying, etc. Now, markets can remain choppy and do nothing for a while. So my sense would be that as of right now, a lot of the pullback is probably done. With a stop, say, around 10,550, you can still go short on Nifty and also on the Bank Nifty with a stop, say, about 25,600, 650 thereabouts. Overall, while we may close higher, but it looks difficult how we can get back past 10,700 thereabouts. So still the market is choppy, and even in global markets, the pullback, etc., is fairly 0.5% style pullback. So that way, if you have to take a position, you should take it on the short side. I don't think the pullback has so much in it that going long is worthwhile. Having said that, Oro Pharma is a sell with a stop of 772, target of 750. Amar Raja is a sell with a stop of 739, target of 710. And CIAT is a buy with a stop of 1200, target of 1245.
On the index itself, though, Ashwini, at what point would you say, beyond what level would you say, well, maybe this is extending after all on the upside?
See, yesterday's sort of range was about 10,550, 10,600, and on the upside, 10,700, 750. So if we start to get past, say, 10,600, then at least you should be out of your short positions. And similarly on the Bank Nifty, I think 25,700 should be that level. But obviously, the market needs to turn around sharply for it to move lower. So if you don't have short positions, probably that time is past. But at least don't go long, because even in global market, the rally isn't very strong. So choppiness is the best case scenario.
Ashwini, thanks very much for joining in with your afternoon trades. Let's get into some more opinion. Earlier today, we caught up with Sandeep Bhatia of Macquarie and Arvind Sanger of Geosphere Capital Management to get their understanding of how the earnings season has panned out and what lies ahead for the market.
From here on till April of next year will be the full-on volatile season. So it is akin to the typhoon season, which comes in the US. So we will have a lot of volatility, and please buckle up and belt up for that. I think as far as India is concerned, on the economic side, we see a clear trajectory of earnings growth improving. We also see a clear trajectory of capex coming through, and companies like L&T start doing well. We also see the healing of bank balance sheets, which has proceeded over the last 3 years. I would be a buyer in any market correction for all the reasons we just gave out, especially corporate earnings growth and improvement in capex. There's belief in the corporate micro story of this country. The domestic investors continue to see good flows. So I definitely see support whenever the market corrects. There's definitely support. As far as the India-specific question is concerned, I think India is very well placed in the entire emerging market group of countries. Macroeconomics is actually improving. I think across emerging markets, India will continue to be a favorite, because not only it's a strong GDP growth story, but it is positioned probably one of the best in the entire emerging market universe in terms of its geopolitics. I wouldn't think that we are in the single-digit frame, because clearly the entire financial sector will show good growth. And I've mentioned this on this channel before. Actually, a fall in rupee boosts earnings power for most corporates, and we will see, therefore, earnings growth also helped by the correction in rupee. I would think that earnings growth for the broad market would be in the 15% region, and for indices, it would be in the 18% region.
I think the markets are in a trading range. Clearly, some of the panic of a few weeks ago in terms of the India-specific panic and the emerging markets panic in terms of currencies, what have you, that has subsided. NBFC situation, while a crisis seems to have been avoided, but my meetings with some of the people in NBFC suggest that loan growth is going to dramatically slow down. Certainly in this current December quarter, potentially that slowness will persist through the March quarter. So that will have some fallout effect on the economy. Some of the higher quality NBFCs that have gotten beat up a lot, I think if they pull back some more, they could be very interesting to me. But I think there are some global stocks that we like, which are plays on global trends, not just in the IT space, but in other areas. You look at somebody like a Motherson Sumi, which is a high quality company that's been beat up on concerns about trade wars and what might happen to German auto companies and some of their biggest customers.
On our radar now is NCL Industries. They've posted a mixed set in Q2. Revenue has increased 22% on a year-on-year basis, but the same couldn't translate to the EBITDA level. We are joined now by Mr. Prasad, the Executive Director and CFO of the company. Hi, Mr. Prasad, good afternoon. Thanks very much for joining in. My first question to you is exactly that. Your material costs have dipped, but power, fuel have both spiked. Transportation costs continue to remain high. By when do you think we could see some bit of improvement on an operational level?
Increase in volume. We have regarding the cement business volumes. If you see, we have grown. The volumes have grown up by almost 32% for the quarter. Definitely, these increase in volumes are offsetting this increase in the cost of production to some extent. So thereby, we could post some better EBITDA as compared to the previous periods. See, the cement has started recovery, and from now onwards, there should be some, as far as the realizations are also concerned, there should be some improvement because this auspicious season has started after Diwali. So there should be some improvement in the realizations also.
What are the, what are the realizations compared to last quarter?
Last quarter, they are at the same level. So there is there is no increase. We are at almost 3,000 rupees net realization per ton.
Sorry, what is that? I mean, what is the percentage change, Mr. Prasad, in realizations?
Realizations, more or less, they remain at the same level. Yeah, they are flat. But the thing is that increase in cost of production, particularly on account of this coal. So, as a result of this increase in the coal cost as well as this transportation cost because of the diesel price hikes.
Right.
So, we could get lower margins are affected.
Right. No, so if you look at revenues themselves, right, cement revenues, they themselves are down, right? I mean, quarter on quarter or year on year.
Yes, that's what. Yeah. Because the earlier we were concentrating more into trade. Subsequently, after this new capacity, we were supplying some quantities, this new non-trade, institutional supplies also, where the relations are as decided by the government, that prices are at a lower level as compared to the trade. As a result, the realizations also have come.
No, is that because there isn't enough demand otherwise? So you have to...
we are getting a huge demand from the government supplies.
Sure.
Not from the retail front.
Okay.
But from the retail front, we are expecting the demand to pick up from this time on, from this month onwards.
So this 279 crores in cement revenues, what how much comes from government? This institution.
It's almost 35%. It's almost 35%.
And a year back, that was negligible. It's now 35%. Is it?
Yeah, that is at 35% as of now.
Okay, and it has steadily grown over the last many quarters.
Yes, initially, see, sometime back, our concentration to this government supplies or institutional supplies was only some 5-10%. Okay. After this expansion, because to utilize this additional capacity, we have gone for this additional institutional sales.
And will it stay at 35, or will the share of this continue to grow?
No, that will come down. That will come down, and once we see we are entering into the new markets also, particularly the AP and Telangana. See, in some regions earlier we were not present. So we are spreading our marketing network also in those places.
Sure. What is the difference? What is the difference per bag when you sell to the government and retail?
It will be almost 20-25 rupees a bag.
The difference would be 20-25 rupees a bag.
Yes.
Okay, fair enough. Could you just leave us with some outlook for the full year for the cement business in terms of revenues?
Yeah, this year for the first half, we have done 1 million tons of sale. And for this year, entire year, we are expecting a sales volume of about 2.1 to 2.2 million tons of sale. And other divisions also, boards also, we have started utilizing the capacity from the third plant.
I meant cement sales in terms of value, Mr. Prasad. So you'll do 2.1 million tons, but for the full year.
Yeah.
But value-wise, what could the numbers look like broadly?
The EBITDA, we have about 450 rupees for this first half. So it may go up to slightly, it may improve for the second half. So finally, we may end up with some 475-500 rupees for the year.
Mr. Prasad, thanks very much for joining in. Let's focus on NCC for a bit. The stock had actually shot up. It's now off of its high point a little bit, but nevertheless, it's a good reaction to a good set of numbers. Numbers were expected to look better actually on a Y-on-Y basis, driven by a low base, but I think this is even better than the expectations that we had. In terms of margins, 12.4%, that number looks very good because, our own poll had expected that perhaps it could be stable in that 10 to 11% mark. We are joined now by the management, Y.D. Murthy, the Executive Vice President of Finance at NCC. Now joins in. Mr. Murthy, good afternoon. Thanks very much and congratulations on what looks like a very good quarter. We've just had very few moments to go through your numbers. So if you could just give us some of the highlights and also some of your internals.
Yeah, we have done well in the second quarter. We have reported a top line of 3,137 crores on a standalone basis. It is 134% growth compared to the second quarter of last year. EBITDA is 365 crores. Net profit is 124.35 crores. And for the 6 months period, the top line is 5,527 crores.
Sir, we have the basic numbers actually. If you could help us a little bit in terms of, what the order flow has been like in this quarter as well as for the first half.
Yeah, a company has done well order book-wise. In the first 6 months of the current year, we got about 8,359 crores of fresh orders. And the order book at the end of the second half is 32,955 crores. And going forward, the guidance of 11,000 crore top line for FY19, we are confident we will be able to achieve. There should not be any problem there.
So would you raise that guidance now?
No, I don't think so. We will stick to the guidance.
Mr. Murthy, margins in Q1 were at 11.4% or so, and in Q2 it has come in even higher, 12.5% or so. Is there a one-off here? Is this sustainable? Could you just talk us through that?
Yeah, the second half, actually the one you are telling is of the consolidated margin, whereas standalone EBITDA margin is about 11.8. And for the 6 months period, the average EBITDA is about 11.5. And we are confident we will be able to maintain it for the year as a whole.
So this quarter, you have actually doubled your order inflow, right, from Q1. I mean, I think at Q1 you had about 4,000 some odd crores. Q2 has come at 8,000 odd, and I think for your full year, your guidance was at about 14,000 odd crores. Could you exceed that?
We are at par. There is a possibility we may exceed that, but the fourth quarter is the election year, election quarter. How the order accretion, order award will pan out, we do not know. But so we stick to our guidance, but we are confident we will achieve the guidance. We surpass the guidance.
So what's the debt?
Debt is about 1,670 crores in the standalone balance sheet.
All right, Mr. Murthy, thanks very much for joining in, and thanks a lot for giving us those details. So that's the management of NCC. Earnings looking good this quarter. With that, we'll take a very quick break, come back, more on the market.